All right. So like I said, we're going to talk about scaling in, using trend lines and stuff like that to scale into your trades, or either get those entries. If you miss the first entry, you have your second, third, even maybe even your fourth time chance of getting into the trade. All right. So of course y'all know about the trend lines and stuff like that. And y'all can see that I've been using trend lines. Something we talked about last week was how when we take a previous week or previous day high, we start to see some type of, like, once we take that liquidity, we start to see some type of pullback, or either a pullback or a complete reversal, right? So we can see here that from this week, we already have taken previous week high, which was our targets. And then now this week, just previous week that just passed, we started to see the pullback, right? So we just basically just pulled a trend line from this high to another strong high, and now we have like a counter trend trend line. If those that don't know why I have this bigger trend line, it's just based off the 4 hour, right? So I just have a 4 hour trend line that's pulled. So it's just a basic retail type of deal, just a regular trend line, point A to point B, and then we continue to go there. As you can see, we always tend to have an impulse, correction, impulse, correction, impulse, correction, until we finally tap into an order block or a point of interest or either a liquidity grab that's strong enough to start reversing and start taking the liquidity out of all the previous highs and lows. Okay.
Yeah.
So that's what we tend to do. So when we're in a trend line, when we see a trend line starting to form, we know that we're gathering a lot of traders, either sellers or buyers, into the market. And we know that all those previous areas, all these previous highs is going to become liquidity sooner or later, right? So like I said, if you've seen that we had a breaker block, we had the first low, the first high that was created, another low, we take out the liquidity, tapped into our breaker block. That started our trade Monday. And again, typically we know Tuesday or Wednesday tends to create the lows and highs of the week, right?
Yeah.
So we can see Wednesday end up forming the low of the week. So we was following this day by day just for the daily cycle for the most part, or the weekly cycle. I mean, we're anticipate that maybe Tuesday to make the actual low of the week, but we can see that we still haven't taken this major liquidity point here. And then Wednesday we finally did, tapping right into a strong low. And then that's what started to reverse the market. Again, we're in a trend line. We need something strong enough to reverse it. And we do have something that could potentially reverse the market. So we just basically just traded into the strong point, but you just follow the trend line. You had an entry that potentially could have been here. You had an entry that was potentially here off the breaker block, right? And then we had one more sweep of this high into this area, where we then had a strong low point in here on a lower time frame that was tapped into, potentially giving you another trade to take into here. So you did have a few opportunities to catch these sales. Now, once we broke this counter trend line and tapped into something strong enough to break this counter trend line, this is where we could have had multiple scaling entries, right? Which we spoke of last week as well. So again, the same old thing over and over, right? We tapped into a strong low, right? We tapped into a strong low. There's all the block. Again, first high, first low.
Always the same.
Hmm?
It's always the same. It's crazy.
Yeah. First high, first low, liquidity. We built up a trend line, right? We built up a trend line. And as you can see, we come into something that's strong enough to reverse the trend line, which right here, first high, strong high, low, high, liquidity, tap in. This is going to take the trend line out. As you can see, we take the trend line out. And now another strong point to a strong point. This is your first entry. You could have took a sell, of course, if you wanted to ping pong this. Could have took a sell here and buy here. But again, start following the strong points, strong point to strong point to strong point. Again, we broke, retest, no, we still had liquidity here. So breaker block was still available. We tapped into, again, we create a trend line, we tap into something strong enough to break the trend line, we break the trend line, and now you have a new entry here. So all these trades should be closed. And the most, I say the most extreme area that was left that took out liquidity, considered as a strong low, should be the only trade that you leave open. And now we get another opportunity here. As well as this trend line right here was built, which y'all knew I scaled in maybe 4 or 5 times inside of here. So, you know, multiple strong lows was created in here. Even on the seconds, if you wanted to see it on the seconds, but on a 1 minute still is pretty clear, right? We can see that some of these strong points, very minor, but you can see them, and it's easy to take a couple of trades here in this trend line. And then once you have a trend line, the market has to tap into something strong enough to break the trend line, understanding that this is counter, right? We understand why this is counter, right?
Yes.
Yeah.
I got it.
Because higher time frame is stronger, right? So this is the higher time frame POI. So this POI is not stronger than this POI. This is just simply a pullback. So pullback, take out liquidity, which this is going to mess up a lot of either smart money concept traders or even retail traders. They're in these trades, so their stop losses is where below each low, right?
Yeah.
I got a
So-
question.
Yeah,
Can
yeah.
we ask in the later or now?
Good night. Go ahead, ask now.
Okay. Yeah, about the break blocks, when you try to ping pong and all that stuff,
Mhm.
do you direct entry or do you want some confluences to enter?
So it really depends.
I mean, a shift or stuff like this, like.
Yeah, so all of those things is like very like subjective to you, like depending on how you
Okay.
feel. All right, because like this area, this particular area is such a weird area to me. Personally, I wouldn't directly enter this breaker block. I would like to see more confirmation. So once I see something like this and we sweep some highs, then I can enter that trade. If you also look at the Discord and the entry models, there's a bunch of different entry models that I do use. And I use each one of them here, like either the closed candle or
Yeah.
just a sweep of some liquidity. Like sometimes it won't be a direct order block. Sometimes it's just a sweep of liquidity. Like it all depends. It's all subjective towards like how you want to trade it or what's comfortable for you.
Okay, thanks.
Yeah, because some of us are a little bit more risk tolerant, some of us more conservative.
Mhm.
All right. So anyway, so yeah. So I forget what I was saying. All right. Anyway, so yeah. So you can see that once we take out a trend line, we take out a lot of liquidity. You can believe that their stop losses are under here, right? So we're taking out all their stop losses, which mean most likely they're not taking partials, or they might have taken partials and moved stops to break even. They're looking for the highs to be to continue, which they're correct. Just the problem is they're just early buyers, right? So all these are considered like early buyers. So we take out the trend line, and now we're back in here. Now, keep in mind that this break will seem to a smart money concept trader, they'll be most likely looking for this demand to hold to continue to go higher, which makes this a smart money trap or whatever you want to call it, but smart money trap. And that causes to think, oh, this is a breaker structure. So then they're looking for something along the lines of here to be their supply for the market to then reverse, which you can see here. It gives them a little bit of something, just right here, gives them a little something before taking off and taking them all out. So they'll take them out twice, right? They'll take them out on the fact that they were trying to enter here for buys. They lost that trade. And then they try to catch this sell, and then they lose out on that as well. All right. So now we continue going up, creating more strong points or points of interest where we have liquidity. As y'all can see, why I marked this as a breaker block, because it's the last buy to sell. And then we break out of it. This is our liquidity. So this is our only point. Of course, I didn't trade it because it's not that clear, but again, the rules still sit there, right? The rules still stand. So you can see we break up higher, more liquidity being created for the next day. We take out not only Asia low, but the liquidity that was built under it. And then the cycle all begins all over again, different time frames, higher time frames. But like I said, we're talking mainly about scaling into your trade. So you can see right? We have a low, a high, liquidity, low, and then we shift into here, break a block. Now you enter there, you have a low, a high, a low, take out the sweep the liquidity, break a block, once again, right? So we could just draw a trend line and we could just keep trading this trend line, multiple entries. As you can see, 1, 2, 3 is the ones that I was actually able to identify. If we go to lower time frames on seconds, we probably identify more, but just using the 1 minute, that's the trades that I was able to really see. And then again, tap into order block that's strong enough to break this trend line. So this is how you can start stacking in your trades, or scaling into your trades and get a higher percentage of a percentage growth on your account. All right, so this is what I normally do when I trade a small trade account. I'm trying to flip an account. Some of y'all follow me on Instagram. Y'all seen that I flipped accounts. So this is how I do it. Just trade a trend line, and you can trade the trend line. And what we already understand is trend lines are liquidity, correct?
Yeah.
Yes.
Right. So we can trade the liquidity, understanding that the trades we taken are liquidity in the future. So as long as you have an understanding of liquidity, you can trade the liquidity, because we understand the market. We could still trade double bottoms and double tops. We understand and know it's liquidity though, right?
Yeah.
Can trade
So-
everything.
Right, almost. I would say I wouldn't say everything, but the things that actually make sense, the things that fits our rules. So if we're taking liquidity, we could take the trade. After taking liquidity, you can trade, but understanding that you are liquidity now, right? In the future, you become liquidity. So again, we take out these lows. We have these last sell points that takes the market down. We have this high, and we have this low. This low gets swept. This low actually does not get swept on a broker. On here, it does, but on a broker, it doesn't. So what this actually looked like was, it looked like this, right? And then it barely took it out, something like this. That's what it looked like on a broker, right? So I didn't take this trade either, but this was a potential buy setup here. And then you can just basically draw a trend line again, right? You can just draw a trend line on up, and you can trade all the points, right? All the strong lows. You just follow the breadcrumbs, the blueprint of what's going on, and you can just keep on trading, right? You have inducement coming down until it just sweep the liquidity. So you may have not got tapped into this OB, but if you would have just traded just the liquidity, you would have gotten to this trade. Second chance entry right there. And you just follow along, as well as you could have traded the downwards, which I only found one trade, right? All right, so you tapped in something to the left right here. There's your liquidity, right? The break, the high liquidity. This is the only area that's left. That's why we reverse. You get a clean reversal with liquidity, and now we're taking it out, and now you're able to start trading the opposite direction till what? So we tap something that could break the trend line, correct?
Yes.
So we trade the trend line, it breaks the trend line after tapping area, either taking liquidity or tapping to an order block that's strong enough to reverse it. And then the cycle all begins again. So you have this high, this low. We know this is liquidity, and then we just start trading based from there, right? So this one I didn't trade because I was definitely highly anticipating more bullish moves, but I was already done for the day already. Which, I mean, I think me and UZ was in the same exact trades. Crazy. That was crazy.
Yeah.
Would it not be risky to trade this, like the spike of, I don't know if it's the PPI or stuff like this, but is it not risky to trade it because the
talking
spread
about
is very
this?
high?
Talking about scaling into your trades?
No, I mean the big spike. You mean you didn't trade?
If it's the rules, right?
Okay.
Like if we look at it, this is our first high, first low, right? Go to the 5 minute. See? First high, first low, that's liquidity. We take out the liquidity.
Yep.
So if you had a limit order, if you understood this already and you already had a limit order, as you can see, you would have got tapped in perfectly.
Okay.
Same stuff over and over again. So even news works for you too. So you would have got tapped in, and it would have continue going bullish, which we still I'm still anticipating this high going, and I think that's the high I wanted to go. Yeah, I'm still anticipating this high to go. Overall, coming into this daily order block that I point out last week sometime as well. So yeah, so it's risky to trade it if you're trying to, let's say, maybe try to catch the sales out of it, which because you could have probably took a couple of losses before actually getting into it. If we was looking, farther left and you was trying to look for certain points, right? I mean, it's a strong high, but I just I wouldn't have sold it. EU is a lot cleaner on this actual setup. EU kind of gave you the whole setup before the market actually dropped. So
Yeah.
Hey,
I
JP,
actually
I got a
expected
question.
to go higher, but
all right, who said they got a question? Sorry.
That's me.
Okay, what's up?
So basically, you understand there's liquidity down in the downside that needs to be cleared. So,
Right.
what makes you to still enter longs in the upside?
Oh, right here.
Yeah.
Oh, because liquidity, right? So remember when I talk about balance in the markets, we're not going to always just take out all the liquidity at one time. So news events and stuff that happen in the market, it gives them an excuse to chase this liquidity faster because it's news, right? Everybody know news, there's a potential for a high volume to kick in, right?
Right.
So this gives them an excuse to hurry up and get to where they need to get instead of slowly trade. Like they normally, without news, it probably would have done something like this, right? It would have created a trend line, which we always see, right? Trend lines created until it finally taps this area and takes out liquidity, and then it continue to go up high, right? But with news, it has an excuse to just move high volume. So it don't have to do all that. It don't have to do a build up, anything like that. It could just shoot straight to where it need to go and then go up higher. So just know and understand that it needs to fill a little bit at a time, right? You can see this took liquidity. You see that? This one took these lows, it takes liquidity. Then what happened? This right here takes more liquidity. And then what? We have a high. So isn't this not inducement? So that means this
it's
area
inducement.
has to be filled first, correct? We already mentioned, we talked about balance, right? So this needs to be balanced first before then going lower to take the rest of the liquidity, balancing the rest of the market.
So we're basically following the order flow to see where's the last strong high, strong low has been formed, and we basically want to see how it balances during the Q zone sessions.
Right. I mean, I don't really look at necessary sessions. Like I look at them, but they're not the main thing. Sessions are used for like confluence wise, right? Like everything on the charts, you don't even need Asia session. You don't need any, like I could completely just do this. You still see the same points. You're still going to see what is liquidity, what is not liquidity. You can point out when Asia is liquidity without knowing that this is Asia session. So you don't necessarily need to understand like the sessions and stuff like that. They just help you identify things as confluence, right? Confluence is just, we need to build up confluences to give us confidence to take the trade. All right. So remember what I said, trend line, right? If this is a trend line, right? If all this is trend line, we're going to tap something strong enough to break some of that trend line until we tap an OB to continue, right? Yeah. So you can see that we built a lot of liquidity, right? This was the first high, low created. This is an inducement, but we can trade the liquidity. Remember, I just mentioned that we can trade the liquidity, understand that you are liquidity in the future. So the trades that I end up taking, even right here, what this is, a trend line, right? We tap in, you sweep liquidity. We tap into something strong enough to break this trend line. As you can see, we have a trend line going bearish. So you could have traded, right? The sweep of liquidity, you could have traded here, you could have traded here, you could have traded here. All until we tap into what? Something strong enough to break that trend line. All right. Now we create a new trend line. So now I take a trade here, here. There was like multiple trades we could have took in here, right? And now we created a trend line, which there's your trend line. Now you just what? Go up and trend till we touch something strong enough. And whatever's to the left might have been strong enough, may have been strong enough to just take out the trend line. Tapping into the last area that's haven't been balanced, which happens to be this area. We had a trend line, tap into something strong enough, our liquidity strong enough to reverse it. Their first low, liquidity, and then we continue with some sort of order flow till the market needs to target all of the trend line, tap into our point of interest, and then we continue to go bullish.
So are these trades solely based on the 1 minute to understand the strong points and the liquidity only?
For these trades, yes. But yeah, for these trades, because you can see how small it is, yeah, for these trades.
Because
overall,
I'm struggling if I go from top down and then to understand the order flow and then where's the inducement points, sometimes I just get struggle with whether or not I'll be trading while it's being pulled back. Because for example, like the 15 minutes, we can see a strong lows and it has not been balanced, but we don't understand when it will be taken out, or is it still valid for us to really trade in the upside whilst there's inducement in the downside being cleared?
Yeah, so it has to balance on time frames itself. Like you don't have to trade the lower time frame. I just do it because just get more trades. If you just trade just a 15-minute, right? If you trade just a 15-minute and you understand, like, let me see how I want to word this. So with the higher time frame narrative, you need to understand direction, right? We want to know what's the overall direction and the probabilities of, are we mainly looking for buys or mainly looking for sells? So for the 4-hour time frame, we have a bullish market, right? We're bullish. So you shouldn't be looking for sells long term, right? Because we're mainly bullish right now, 4 hour. All right. Now we go to the 15-minute, and you might see something like this. If you see strong highs being created, we're bearish temporarily. So on the 15-minute time frame, we're bearish. So you don't want to be trading a 1 minute order. Like you don't want to be trading 1 minute order flow. You want to trade a higher time frame order flow or strong highs, strong lows inside of the 15 minutes. So, and what I mean by that is if I know that if I'm in a 4-hour bullish, right, the points, the strong low points are the points that I will start looking for in the M15 or something, lower time frame to go bullish, right? Because now I have a 4-hour target. This is my 4-hour target with 1 minute or 15-minute type of entries to get to my target. All right. So that's the same thing for 15-minute targets. So if I know that I am, right, which we already talked about, impulse correction, if my correction phase, if I'm bullish on a 4-hour, right, if this is bullish on a 4-hour, the pullback is on a 15-minute time frame. I am trading the 1 minute based off the 15 minutes. So now with this, if it's this a strong high, I'm looking for 1 minute entries to take out what? 15-minute lows. Strong 15-minute high, I'm looking for 1 minute entries, take out the lows. And we gonna continue to do this until we tap into something strong enough, higher time frame wise, that then change the direction. Now my target is now this high, which is actually a 4-hour high, right? Now the 15-minute starts to adjust, the 1 minute starts to adjust, and now we can start taking all the strong lows and continue to target the highs. So it's like it's just fractal. It's just a fractal nature of the market. So we know 4 hours is bullish, but 15-minute is what? Bearish. We started taking out lows, certain lows, creating certain strong highs. Asia, again, a session that you can use as confluences to show that, okay, today is what this is, Friday. Friday is bearish, starting to become bearish. Start of Friday bearish. Look, strong high. Look at your targets. Your target is strong high, so I'm going to take out this low. Go on a 1 minute. Strong high, go on in 1 minute. What this is, okay, target. Strong high, all right? Want to go on a 1 minute. This is your target, all right? That's why I say hit your targets and take your partials, because look what happened. Market takes out this high. Did we tap into a 4-hour or a major strong high point? No, we still have all this imbalance. We just tapped to something strong enough to break the trend line temporarily. tap into something that's strong enough to stop the market and start going back bearish. Now you have all these tiny little movements, but all these tiny movements is on a 1 minute time frame. Target is still this 15-minute low. So you can start taking all these different little entries in here all the way till we take this low. Once we take this low, the market start becoming more risky. You don't want to take more trades going bearish after taking a low. You'll do better just holding some runners than taking extra additional trades because we already took the low. All right. And then if I go to like maybe the 4 hour, maybe a 1 hour, we'll see something that might be strong enough. So you can see here, maybe it's a 1 hour, 4 hour kind of clear. So there's your 1 hour. So look at this. So see this strong out 1 hour. You see this, right? Strong low, right?
Right.
That's strong enough to break the trend line. Now 1 hour just help change the direction of the market. You can start going to lower time frames and start trying to figure out what's going on here, right? You can see the whole adjustment of the market change. So now for the next day, you can see what? Strong points. See strong points. This may be a strong point here to continue market bullish. Now, market what? Create a strong high. And now we're transitioning back to a temporary bearish market. Going into what? Maybe which you can see the strong low, 1 hour strong low. So the same thing happened over and over. So now it's just impulse on the higher time frame, correction on the lower time frame, impulse on the higher time frame, correction on the lower time frame, and then until it hits a big enough time frame, which might be the weekly, the daily, whatever, that end up tapping into here, strong enough to then what? Break the trend line. And now the whole trend line is broken. And now we can start trading the strong highs all the way back bearish, building a new trend line on the bearish side until it repeats itself and tap into something strong enough to reverse it again. It's just like a rocking horse, man. It's like one side, they're gonna do this, next side do this, and it just keep repeating over and over and over and over again.
All right.
Like a Russian doll, just inside out, and then it goes back to building back up. All right, so like look at the market, start studying that, start paying attention to like what points. Like, see, we have a 4 hour strong point because this was a 4 hour strong point. You can see the high, the low. You can see the build up. You can see the market building back up and pulse. All right, we already know higher time frame is stronger. So we know that higher time frame, this is liquidity, right? The first break, the first low, liquidity. Now what we do, we build up again on a lower time frame. All this is gonna probably be on a 15-minute or whatnot till we tap something strong enough to push the market back up. Now 4 hours aligned, and then the lower time frame is gonna start aligning themselves, and then we go up. Now look. That was the first breakout, the first breakout, right? The first low, liquidity. So now the market builds itself back up, takes that low, and then what it does the same thing over and over again. All right, that's why other higher time frames are important.
All right, thanks for clearing up, JP.
Oh yeah, no problem. So y'all use these build up points as to y'all advantages to start trading the counter trend trade, because these counter trend trades or these build up phases are liquidity, yes. So, but I don't know about y'all, but I don't like waiting too long for a trade. If you can imagine, last week you understood that this was your area and you waited all the way until midweek the following week to just take a trade here to go higher. That's fine if you're busy working and stuff like that, but for me, that's just too long waiting for a trade, right? So I would take all the pullback trades until we tap our area, and now I can buy here, and then I can take all the trades that I can find to start becoming bullish. Once we take this high, I start leaving runners, right? I just start leaving runners. We don't want to take no more trades past this point, right? Unless it shows that we could. Maybe we felt like, okay, this was a strong low, a strong high, so we wanted to sell. we tapped into something that may be strong enough, then maybe, yeah, I take a trade and look what we do. We take out that high. Cool. Everything plays out. Now we're back in the build-up phase. So now I could just start taking a bunch of sales, all the way until we get to a POI that's strong enough. And now what? I'm taking buys now. So this is how you can ping pong the market on a higher time frame, but use liquidity to your advantage to understand that is liquidity and all that good stuff. But we got less than 1 minute, so I'm gonna start the next call and I'm gonna end this one. Okay, y'all?
Yeah.
All right, guys.
Yes.
Yeah.